Morning, ladies and gentlemen. Welcome to Magic Bricks Hangout series. Our endeavor is to trigger a buy and bring back consumer confidence in the real estate market. The topic of today's session is tax implications of real estate investments. To discuss on the same, we have Anish Sanghvi, partner, tax and regulatory services, and Niren Shethia, director, PWC. Anish Sanghvi is a partner with PWC's tax and regulatory practice and has over 17 years of experience with international consulting firms. He is also a member of Institute of Chartered Accountants of India and a commerce graduate. He has been involved in advising clients on establishments of joint ventures, business organizations, reorganizations, tax due diligence, tax appeals, litigation, exchange control regulations, corporate law, and other regulatory laws. He also advises on fund strategies, profit extraction strategies, and obtaining regulatory approvals. I also welcome Niren. He is a director in PricewaterhouseCoopers Private Limited and is a part of indirect tax practice in Mumbai. He has over 11 years of experience in advising multinational and domestic clients across a range of real estate and financial services sector, clients in areas of service tax, excise, customs, VAT, CST, and foreign trade policy. I also welcome Neha Nagpal. She's a senior journalist working with Magic Bricks and she has overall experience of 10 years. Without any further delay, I think I should hand it over to Neha. Over to you, Neha.
Thank you, Pushpa. I welcome Mr. Sanghvi and Niren on the board today. Before we start taking up the session, I would like to ask Mr. Sanghvi, basically I would like to know that what kind of issues they come up with and they have to deal with in terms of tax implications. Because Mr. Sanghvi, house is the biggest purchase most people make in their lifetime. And when it comes to buying, selling, or even owning a property, it can be really taxing. And plus, when we know that financial year is about to end, it's actually about to end. The tax-related issues becomes quite significant. So, what is your take on this?
So, in my experience, whatever questions have been asked in general from home buyers is more to do with respect to when I am selling, my residential house, or if if I want to buy a new property using proceeds of my earlier house which I want to sell. How do you utilize that money, and how soon do I need to invest so that I don't end up paying capital gains tax on the sale of the first house? That is a very common question. The other question is more to do with when do I need to in whose name do I need to buy the house so as to ensure that the eventual sale is also going to be exempt. These are the kind of questions that typically come up in a conversation with home buyers, and that's something that is very commonly asked. The other related question is you have tax benefits arising out of loan from house property and interest deductions that you get. How much can you get? What are the conditions that are relatable to getting that interest deduction? All those kind of questions are very common to ask.
Right. So to start with, Mr. Sanghvi, I would like to know, can you give around 5 tips to a consumer in terms of how they can really say, let the minimum tax outgo can happen in their, transaction while making the transaction into real estate property?
So one quick thing that one needs to look at if is a salaried employee, is it possible for a salaried employee to, instead of if there is a way in which instead of owning a house, can there be a house in which he can stay from a rented premises perspective? So if you have a salaried employee having a rented house to his name, you can claim a house rent allowance deduction. Simultaneously, he can have an owned house, where he's not occupying because of his business or because of his employment, and he's owning the house, renting that out, so that you can save tax on the interest outgo that you pay for, the borrowing that you made for purchasing that house. Now, in essence, this is a very good tax benefit or tax saving that you can look at. But the difficulty is, in Indian mentality, we don't like to stay in a rented house. That is a social problem, so to speak. But from a tax perspective, it is a great tip. The other is when you're selling the house, evaluate the house that you're going to purchase as well. Or is there a mechanism by way of investing in bonds, which are tax saving bonds, which really can help you save the taxes on the sale of your residential house? These are common factors, or these are the common tips that you typically need to understand before making house investments.
So when we talk about the rented, saving a tax on the rented property, I think that is quite relevant for people living in Mumbai. Actually, Mumbai is known for the rented accommodations. What do you think that?
I think rented accommodation is a psychological barrier that one needs to break, because the more you can own a house in, let's say, Gurgaon, and rent a house in Mumbai, or your similar things can happen. You can own a house somewhere else and rent a house wherever you are located, so that you're, like I explained earlier, it is beneficial for tax saving, because you get an HRA deduction as a part of your employment, and you get interest deduction for the borrowings that you make. Overall, your tax liability should reduce, because there's no limitation on what amount of deduction that you get on interest if you are renting out the property. Whereas if you are a self-occupied property, you're staying in a self-occupied property, there is a limit on which you can get a deduction for, which is 2 lakh rupees per year.
Right. Let's quickly take up our first query. It's Asit from Kolkata. He's asking, hello sir, my name is Asit and I want to know about the tax implication if I sell my flat. I'm not buying the property. If I sell my flat, what are the tax implication I should, face or probably consider?
Okay, so a simple sale of flat, assuming that the flat is owned by him, by Asset, for more than 3 years, then the characterization of the income from sale of flat is long-term capital gains. And when you have a long-term capital gain, you are typically taxed at 20% plus surcharge and cess on the income, on the gain that you have made. Now, if you had made investments in, let's say, capital gains bond out of the proceeds that you are getting for sale of flat, you may be able to save that 20% as well, 20% of tax. But if you're not investing, you'll end up paying tax at 20% on the gain. And to compute the gain, you'll have to look at the sale consideration or the fair market value, the stamp duty value, as you would say, as the consideration amount, less the cost of acquisition, the cost of purchasing that flat in the first place, which can be indexed if it is held for more than 3 years. So you look at the index cost of acquisition, you look at the sale consideration, or the stamp duty value, whichever is higher. The difference between the two is the gain, and on the gain you end up paying 20% tax.
Right. There is Gaur Saran from Kolkata. Again, he is saying that if a residential flat gifted to own sister, then what capital gain tax attracts as per Indian income tax rules?
So what I understood, the question was, it's a residential flat which is gifted to a sister.
Right.
In that case, per se, there is no tax if you are giving a gift to your blood relative. Okay, there are identified relatives which are covered in the exempt category for giving a gift. In giving a gift, you ensure that a gift deed is entered into. The gift deed is stamped and registered as well with the stamp authorities, so that the gift deed is considered more appropriate from a legal perspective. And neither the sister who is getting the gift nor the donor, which is the person who's called us, is taxable, because this is considered as a specific exempt category of gift.
Right. One of the user on a forum is asking a tax. He's got a situation here. He says that a tax deduction of rupees 2 lakh per year is allowed against payment of home loan, in payment of interest on home loans, if the house is acquired within 3 years. In case possession happens after 3 years, the permissible deduction falls to just rupees 30,000. Can I prevent such situation?
Yes, so that is actually a demand which the house buyers or the developers are also asking from the government in the budget. I've seen a few representations being made on this. Currently, there is no way in which the extension can be granted because the regulation is very clear. If you buy the house within a period of 3 years, then you'll get that deduction of interest. But the moment the
Right.
possession is granted later, there is a concern as to how and when you will get that deduction. And there has been a demand which is outstanding, and hopefully the budget should answer that demand, extending that 3-year period to a 5-year period, because that is typical timeline by which possession is granted. And if you've not got possession till then you've chosen the wrong developer, unfortunately.
Right. Uh, it's Lalit from Pune. He says that what is the rate of service tax on under construction property in India?
Yeah. So it would be the rates have got revised recently, and the rates would be,
Niren, can you be a little louder, please?
yeah, 1 second. Yeah, am I audible now?
Right.
Yeah. So the rate would be 4.2% of service tax, and to that there would be a cess, the Swachh Bharat cess, which would be 0.15. So the total rate would come to 4.35% if it is being done today. Before the Swachh Bharat cess, it was 4.2%.
Okay. A question is from Sandeep Sharma. He's from Delhi, and he's interested to buy a property in Gurgaon. He says that I want to know the property tax rates in Gurgaon and where can if I buy the property, where can I have to pay the taxes? Either Niren or Mr. Sanghvi can take up the query.
Name property tax. I don't know. Typically property tax is something that is practiced by lawyers, and it is a very specific subject for each of the cities. So typically all this information is available on the government website, which determines what is the local tax in that specific city.
Right.
I don't know if you have anything else to add.
Yeah, just that it is paid to the municipality, so it will go to the Delhi Municipal Corporation. And so I suppose one of his question was where whom have to pay to and what is the rate. And the rate card is something which is published by the Municipal Corporation only. So that information you will get from the Delhi Municipal Corporation.
Right. There is a query from Seema. She's asking that the multiple taxation is levied on real estate development projects have increased the overall cost of construction, which makes the properties quite expensive in India. Can you suggest that how can this issue can be addressed?
Yeah, Anish, do you want me to take it?
I think Niren, you can add on the GST and that bit, and then I can add from income tax.
Yeah, thanks. Yeah. So yeah, so this real estate sector and taxability of real estate sector has always been contentious over the last few years. For many years, it was not clear as to whether uh, it will be liable, not liable, because it was whether it's immovable or not immovable. Then came in the twist of it being treated as a works contract, thereby bringing it within the realm of the tax of VAT and service tax. Uh, I agree with her point that yes, there is some tax on tax to a certain extent because certain credits are not available. However, post 2012, there has been certain amendment which allows a developer to take credit of input services and credit of capital goods. To that extent, the cost of construction has gone down. Uh, Further, its fate in GST and how it will be tackled or how it will be handled is not clear as of now. But yes, we have seen and we have helped a lot of clients with respect to uh, the manner in which the tax liability should be computed, what options do I opt for while discharging my tax liability, to see and so as to overall reduce my cost of construction because
Right.
of certain taxes not being
Right.
being able to be offset against each other. Yeah.
Right. The next query is from Puksha. He's asking what type of tax benefit can I avail if I take a home improvement loan of rupees 5 lakh for the renovation of my 30 years old 2 BHK flat in Delhi?
So, whenever you take a home improvement loan, you are able to claim deduction for interest, with respect to, and I'm assuming it's a self-occupied house property. In that case, you'll still be able to claim a overall deduction of 2 lakhs per annum on the interest that you've paid on the home improvement loan that you've taken. But the key factor will be whether the home improvement loan has been utilized for the purpose of actually improving the house, and what documentation you need to maintain to show that you've really incurred expenditure for making the home improvement. I think that would be critical because that is typically asked for during a scrutiny proceeding before a assessing officer.
Right. We are also actually, Mr. Sang, we are also getting the queries, time and again. People are still not aware about the type of, gains we have. Like we spoke about capital gains. We also talked about long-term and short-term gains as well. I would want you to please explain our users that what exactly it is, because I can see there are many queries from different users talking about, please make me understand what is a capital gain is all about in detail. Can you help the user here?
Yeah. So typically, let's see an individual. Individual only buys a house for long-term investment or for your own use. Okay. All these typical home buyers will always classify these residences as their capital asset. It's not that they are trading in houses like developers do, right? So for individuals who are home buyers, it will always be regarded as a capital asset. Once you sell a capital asset, the characterization of capital gains becomes automatic, and capital gains can be declassified in two baskets. One is where you've held the property for less than 3 years, in which case the capital gain on sale of such flats or such houses is regarded as short term. But if you have held the house for more than 3 years, then the asset is classified or the gain is classified as a long-term capital gain. And there is a different rate of tax for long-term capital gain versus short-term capital gain. In fact, there's a different way of computing the gain as well, because in long-term capital gains computation, you are also able to claim indexation on the cost of acquisition. And indexation is typically given so that you take into account the normal inflation in general. So each year the government comes out with inflation index, cost inflation index that can be applied to the cost of acquisition vis-a-vis the cost of acquisition as in the date of purchase. So you actually take a weighted deduction for the cost of acquisition based on the indexation. That is only in case of long-term capital gain. For short-term capital gain, you just simply reduce the cost of acquisition.
Right.
This is the differentiation broadly.
Right, right. There's a query from Janmeet Singh from Pune. He's asking, is property tax is applicable on vacant or open plot in Pune?
Again, property tax issue, I think, can be sorted out by local lawyers because it's based in Pune, and Pune municipal taxes, municipality will need this answer. But in general, I don't see a difference between a vacant property and an occupied property for paying of property tax.
Right. There is a person who has who is actually a first-time home buyer. He wants to invest in a property and he has a budget of rupees 30 lakh rupees. 30 to 35 he can extend. That's what he says. And he has a salary. He's earning for about 55,000 rupees per month in hand. He is saying that how can I have the maximum tax benefits if I invest in my property?
So if you're investing in a property which you're using it for self-use, you will typically need to borrow money. I assume you will get the lending. That needs to be evaluated based on your net take-home vis-a-vis your actual expenses that you may be incurring on a day-to-day basis. So assuming the lender is or the banker is willing to give you a loan of 30 to 25 lakhs, and you have invested that, typically the interest on your borrowing will be capped at 2 lakhs a year for getting a deduction from your salary. And if you're not using it for self occupation but you're letting it out, then the entire amount of interest that you're paying on the loan of 35 lakhs will be allowed as deduction. So you need to evaluate what you want to do with that home, and basis which there could be a tax saving or otherwise.
Right. There is a person called Tarun from Delhi NCR. He's saying, what are the tax benefits I can avail in case I'm living on a rented accommodation, but I also have a flat in Noida, which is in under construction stage.
Okay, so if you are living in a rented accommodation and assuming you are a salaried employee, you may be able to claim the rent as deduction, effectively restricted to a formula to be able to claim a deduction for house rent allowance that you can get from your as a part of your salary income. And vis-a-vis the asset that you are likely to own, because I heard that is in construction in Noida, as and when you will own that property, you can claim exemption if you're not staying in that property from paying any income taxes if if you're letting the property be vacant. If you're letting it out, then you will end up paying tax on the rental income that you earn from the Noida property. Now that needs to be evaluated what you do with that new property that you purchased.
Right. A query from Krishna. He says that I have bought a plot worth rupees 5 lakh from my own funds. Do we have any tax benefits on purchase of a residential plot?
If you've purchased a residential plot and I presume there's no house constructed on it,
Right. Right.
then there is no real benefit. But if you purchase a plot and constructing a residential house for self-occupation, then you can get a reduction of 2 lakhs per annum on the interest if you have borrowed money to purchase or to construct the house.
We have some queries related to the VAT applicable on resale of property as well. Would you like to take up that, sir?
Niren, for you.
It's not a VAT. I think so. She said MAT, MAT or VAT.
VAT, VAT.
Yeah, definitely we take it up.
Yeah. So the person here is Shiva Kumar Sharma from Mumbai. He says that what are the taxes like VAT or service tag or TDS that a seller or buyer will have to pay on a purchase or sale of resale flat in Mumbai?
Okay. So when am I audible?
Yeah, you are.
Yeah. Okay. When you are purchasing, so first of all, VAT and service tax both apply only on under construction property, and once it is constructed and the commencement and the occupation certificate or the commencement certificate or completion certificate is available, then there is no VAT or service tax. Hence, on your resale, I'm presuming that by then the completion certificate is available, and hence there will be no VAT or service tax. But on your purchase from the builder or the developer, he will charge 4.35% of service tax, as in 4.2% of service tax and 0.15% of is Swachh Bharat cess, and he may opt for 1% notification of Maharashtra, which is for the VAT composition rate, whereby he will charge 1% VAT. So totally, it will cost you 5.35% in Maharashtra.
Right. I have got a similar kind of query from Karthik Narayan. He's from Bangalore, And his query is, how is the service tax and VAT calculated? Are there any specific rates at which it is calculated in Bangalore? What are the items to be included while calculating this? So does it vary from city to city? I first want to ask you before you take up this query.
Yeah, so the rates vary from state to state.
Right.
VAT being a state subject, each state provides different rates. I may not have a ready answer for him for the rate of VAT for the state of Karnataka, but
Right.
as regards service tax, it will be 4.35. I understand his second part of his question was what would be included and what will not be included. So normally the tax is paid on the total contract value, and hence if you have for example, your contract is saying that the sale of flat is for 1 crore, and there are preferential location prices and there are floor rise prices, all VAT and service tax normally will get attributed on the total value. One. Secondly, obviously.
Niren, we can't.
Sorry.
Yeah, can you repeat that? I think we've lost you there. So can you repeat the last line of yours?
Yeah, I said there would be certain deductions under both the laws, the VAT and the service tax law, with respect to the value, but that needs to be seen in each case, the facts of each case. Additionally, there are certain charges which normally the builder recovers, which are in the nature of society formation charges and other maintenance charges. Uh, those are normally not covered under the VAT law and are covered under service tax law, depending on the uh, kind of activity. Like for example, if it is for maintenance, then there will be a service tax. But if it's a society maintenance charge, it may again not be covered. So,
Right.
but largely it is on the total contract value.
Right. I have received a query from Pooja. She's saying, is it better to prepay a home loan as a principal amount payment, as the principal amount payment is not exempted?
Okay, so typically, most individuals from a psychological perspective is easier to repay prepay the loan, because you don't want to be in long-term debt. But from a tax perspective, if you have overall a good quantum of income that you can use for other businesses, including making investments in something else, it may be actually better to let the additional money be there with you for making other investments rather than prepaying the loan, because for whatever interest you're paying, you actually get a deduction, right? But if you prepay the loan, you will no longer get that deduction and you will end up paying taxes at a higher level. So it needs to be balanced basis the actual computation of that person, based on whatever the other investments may be, to determine whether you should prepay or not. But really speaking, there is no real benefit from prepaying the loan from a tax perspective.
Just,
Right.
just to add to that, so it's been an experience that normally the interest rate on home loans is the cheapest as compared to any other loan. So if you are prepaying that loan and you are going to take some other loan, then you are in turn going to be more expensive. And sometimes some lenders or banks, they even levy penalties for prepay. So you'll have to even consider that before you decide whether you want to prepay or not.
Right. There is a query from Tejinder. He's asking, I'm planning to sell my current property. If I invest in a new property in Delhi, what should I do to reduce my tax liability?
So you're selling your one property, okay, the entire proceeds could be used to purchase the second property. If you are using the proceeds and you only have one residential house, so assuming that was the only residential house you were selling and buying a new property, then you don't end up paying capital gains tax. Okay, but if you have an existing property, then investing the sale proceeds into another property will not save you tax. Okay, then what you can do is invest in capital gains tax saving bonds, up to amount of 50 lakhs on which you can get a tax exemption with respect to the gains. Okay, so that is the other option that you can use. But the best would have been to use, purchase another property if that's the only residential property that you have.
Right. I have also received few queries from NRIs basically. There's Kanav Sharma. He's saying that I'm an Indian origin living in Canada. I plan to buy a residential property in India. Kindly help me with the tax rules that an NRI must know. So, first question before we take up this, is there any difference between the rules for Indians buying the property and the NRIs buying the property in the country?
So from an exchange control perspective, there is no regulatory embargo on buying a house for an NRI. So a non-resident Indian can actually buy a residential or a commercial property, like any other residence. That is part one. On the tax perspective, typically the house being in India, the property, the income tax is similar to what a resident would, have. That's a key criteria. So you will get taxed at your applicable rate. For long term it is 20%. For short term it is 30%. Plus surcharge as may be applicable. There's prima facie there's no difference between a non-resident buying and selling house property.
Even to add to it, even from an indirect tax perspective, there is no difference whether you are an Indian or an NRI. The tax implications remain the same for an Indian or for an NRI.
Right. So another person called Vipin, he says that since you have said that yes, there is no difference for sure, and he asks that an NRI is entitled to all tax benefits related to purchase of property in India, or do they have do they have to pay a higher tax if they have invested here? So as you said that there is no difference in this case, right?
As long as the non-resident Indian is acquiring his individual capacity, there is no tax in that.
Right. Let me just take up the last two queries, Mr. Sanghvi. Then I'll ask for your concluding remarks. It's Jenny. It's Jenny. Jenny from Bombay. She said whether income from commercial property should be taxed under income from house property or business income.
That's a very litigated question. There are different courts which have held differently for the characterization of income. So I don't know whether property is, and this is the High Court decision, which is jurisdictional in the place where the property is. One could take an argument whether it should be house property or business income. Having said that, commercial properties in general are normally treated as house property income unless you are in the business of buying commercial properties at larger quantities, and that is your normal business activity itself. That's the key characterization difference. Taxation wise, it's different from when you tax house property vis-a-vis business income. The overall tax rate remains the same, but what deductions you get under house property are different from the deductions that you get if the income was characterized as business income.
Okay. A person called Kriti from Pune, she said, do we need to pay higher income tax if we own multiple properties?
So what happens is if you own multiple properties, only one house property is considered to be tax free. All the other house properties that you own will typically be, if they are let out, obviously the rent income will be there. But if you're not letting it out, then you will have to assume a certain amount of rent as notional rent being earned and pay tax accordingly. So that is the differentiation. So if you have multiple houses, evaluate whether you need to have the house in the same name or in individual capacity, or you can see if others in your house or can own the property. Of course, they need to be owned and paid for as well by the other person.
Right. The last query of this session today I have, we have a news called possession of house being delayed, you could lose 85% tax benefit. This was actually a news some time ago, and there's a person called Amandeep is asking how could we let this not happen? There is a situation where we live that yes, projects are being delayed. Is there any implication on builders to complete the projects on time. Project is delayed by 6 years. His project is delayed by 6 years, and there is no occupancy certificate given to him till now. So what should he do in this case?
So I don't think there is any tax saving possible in this case. It is unfortunate that the developer is not given possession on time. There is a real estate regulatory bill which is pending before the parliament, which kind of puts some responsibilities on the developers to have certain basic criteria met and deliver houses on time. Otherwise, there's a levy of penalty, etc. But this is still at a cooking stage. As of now, it's before the parliament. Unless it becomes a law, nothing can be against the developer to do.
Right. So, Mr. Yeah. Sorry. Please continue, sir. Please continue.
Having said that, even from like I mentioned earlier part of our discussion, there is also a representation being made to the government saying that you allow at least from 3 year window, allow at least a 5 year window to be able to acquire the new house, so that you can have certain benefits available, and you just don't lose out because of not your fault but the developer's fault. So that is being proposed. I don't know if it gets passed in the budget or not, or it is proposed in the budget or not.
Right. So I would, hand over to Mr. Sanghvi for his concluding remarks to tell the consumer that how can they really maximize, the tax benefits by investing into real estate, and what actually what are the things which are proposed to government, which can actually pass on the maximum benefits to consumer in terms of saving the tax. Mr. Sanghvi.
Yeah, so just firstly, thank you, for having us, Niren and myself, this event. Just to conclude, when we are looking at making investments as home buyers, make sure you have the right look at the tax implications at an overall perspective. Just evaluate whether there is some saving in doing some activities one way or the other to be able to save some tax. Because tax planning can really help you in not only making this good for your future investments, because you may have some money today, you will grow that money into some higher level, and then eventually look at how you can save overall taxes. That is something that may be useful while buying the house or planning at buying the house and the investment itself.
Right. Niren, would you like to add to the concluding remarks?
Yeah, with GST on the anvil, it is very important to see how the sector gets treated in GST. Globally also we see that it is the commercial side of the real estate which is normally taxed, and the residential side is normally not taxed. Hence, it is important, if it will be a big boost to the sector if in GST the residential side is kept out and the commercial side is only taxed, because obviously the commercial side gets necessary set off, so it does not become a cost in their transaction. So we should keep our eyes open to see how the government is treating the sector in GST.
Right. I thank both of you, Mr. Sanghvi and Niren, to join us today and to share your valuable inputs. Over to you, Pushpa.
Thank you, Neha. I'm really thankful to our guest speakers for the day, Mr. Anish Sanghvi and Niren Shethia, for participating in this Hangout session. It was indeed a great session. I would also like to thank all the participants for their support in making this Hangout session a great session. Thank you all.
Thank you.
Thank you, Pushpa.
Thank you.
Thank you.